Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, December 22nd, 2025, and here is everything you need to know as the markets close for today. The Indian stock market wrapped up the day on a solid note, riding what many are calling a Santa rally as the year winds down. The Nifty 50 closed at 26,172, up 206 points, or roughly 0.79%. The Sensex surged 538 points, or 0.75%, to finish at 85,567. Over in the banking space, the Bank Nifty gained about 235 points, to close at 59,304, a gain of 0.40%. The rupee held relatively steady at 89.6 against the dollar, though it remains a key variable as we head into the final trading week of the year. Overall market sentiment was constructive, with both retail and institutional investors stepping in to build positions ahead of the year-end close. The broader market indices told an encouraging story as well, with the BSE Midcap index climbing 0.8% and the Smallcap index delivering a sharper 1.1% gain. This breadth in participation really underscores the quality of today's rally. Now diving into the top performers today, Trent absolutely stole the show, rallying 3.86% to close at 4,219 rupees. The retail company caught strong tailwinds from consumer spending momentum and year-end seasonal demand. Shriram Finance followed closely, soaring 3.67% to finish at 934 rupees, a move that came on the heels of Friday's announcement of a significant partnership with Japan's MUFG Bank, which broadened its growth trajectory for the NBFC. Among the IT pack, Wipro added 3.1%, and Infosys gained 2.89%, benefiting from positive global cues and momentum in the technology services space. Bharti Airtel chipped in with a 2.09% jump as well, rounding out the day's top gainers. On the flip side, HDFC Life dipped 0.71%, while Tata Consumer Products, State Bank of India, Kotak Mahindra Bank, and Cipla each faced mild selling pressure with declines ranging from 0.45 to 0.59%. Beyond the Nifty indices, mid-cap and small-cap action was vibrant. Garden Reach Shipbuilders and Engineers surged 5.86%, Devyani International jumped 5.46%, and Poonawalla FinCorp climbed 5.17%. The MCX also saw stellar moves in the metals space, with National Aluminium hitting a fresh 52-week high of 292 rupees 75 paise, as aluminium futures on MCX touched a lifetime high of 288.35 per kilogram, signaling strong demand momentum in the industrial metals complex. Railway stocks also found support after the Indian Railways announced a revised fare structure, adding another thread of strength to today's narrative. Zooming into the technical setup, the Nifty 50 held firm above key support levels throughout the session. The index defended its 50-day moving average and the rising support trend line from earlier sessions, closing comfortably above both its 10-day and 20-day exponential moving averages. This technical setup reinforces the bullish momentum we have been tracking. The RSI climbed to just over 52 with a positive crossover, and the stochastic RSI also turned bullish, while the MACD histogram showed fading weakness, all pointing towards strengthening bullish pressure. For Bank Nifty, the technicals told a story of consolidation with a hint of optimism. The index traded within a tight range and formed a doji-like candlestick, signaling some indecision, though it held above the rising support trend line with above-average volumes. The stochastic RSI is on the verge of a positive crossover while the RSI moved up to around 52.28. Key resistance for the Nifty 50 stands at 26,100, 26,250, while support anchors at 25,900 and 25,800. For Bank Nifty, resistance clusters around 59,200, 60,200, with support holding at 58,900 and 58,700. Turning to sector performance, the metals sector led the charge with broad-based gains, riding on strong global commodity prices and improving demand outlooks. The IT sector also participated actively, climbing around 1% as a group, buoyed by positive global sentiment. Capital goods and engineering stocks also showed strength. In contrast, the consumer durables sector was the sole outlier, trading in the red amid selective profit-taking. On the macroeconomic front, the Reserve Bank's December monetary policy outcome continues to resonate through the market narrative. The MPC has signaled an extended pause on rate cuts going forward, with any further easing contingent on inflation consistently underperforming current expectations. The RBI has maintained its neutral stance while projecting GDP growth at 7.3% for the full year, up from the prior estimate. Critically, the central bank revised its CPI inflation projection for 2025-26 down to just 2%, substantially lower than the previous forecast of 2.6%. This rare Goldilocks moment, as RBI Governor Sanjay Malhotra described it, combining high growth with exceptionally low inflation, continues to provide a supportive backdrop for equities. Additionally, today brought news that India and New Zealand have finalized a free trade agreement aimed at strengthening economic ties. The formal signing is expected in the first quarter of next year. This move aligns with New Delhi's broader push to diversify trade partnerships and mitigate the impact of elevated US import tariffs. The commodity complex delivered some fireworks today. Crude oil held relatively stable in the international markets, trading around $60 per barrel, reflecting some support from OPEC output management and geopolitical considerations around sanctions. However, the standout story was precious metals. MCX gold rallied powerfully, hitting a fresh record high of 1,35,698 rupees per 10 grams, climbing 0.77% on the session. MCX silver surged an impressive 2.39%, touching a new lifetime high of 2,13,412 rupees per kilogram during intraday trade. The silver rally was amplified by tight supply narratives and broad risk-on momentum into hard assets as investors position for year-end. Globally, spot gold touched a historic peak near 4,384 to 3,992 per ounce, while spot silver hit a record near 69.23 per ounce. From a geopolitical standpoint, markets paid close attention to progress in Russia-Ukraine peace negotiations, with reports indicating that roughly 90% of outstanding issues may have been resolved in recent talks in Berlin. This development raised prospects for potential easing of restrictions on Russian oil flows down the line, though near-term supply uncertainties remain. Simultaneously, the U.S. Treasury expanded sanctions on Venezuelan oil sectors while also seizing additional Venezuelan vessels, creating offsetting dynamics in the crude complex and keeping traders cautious. Moving into the technical outlook for tomorrow and the session ahead, the Nifty 50 and Bank Nifty remain positioned in positive momentum structures. For Nifty, traders should watch for consolidation around the 26,100 to 26,200 zone, with a potential near-term dip anticipated around December 23, as one analyst flagged based on time period alignment. Such a dip would likely act as a buy-the-dip opportunity if broader support at 25,900 holds firm. Bank Nifty's bias stays constructive as long as it trades above 59,000, with the next resistance cluster opening up at 59,800 to 60,200. A decisive break below 58,800 would shift the undertone to consolidation, but no such signal is in sight yet. The Santa rally narrative is still intact, and the year-end positioning by both domestic institutions and a moderate return of foreign buyers continues to underpin the broader market structure. As we head into the final trading week of the year, keep a close eye on FII positioning. Recent data showed foreign players turning net buyers again after weeks of selling pressure, even as domestic institutional buying has remained strong. This shift towards co-participation is healthy and suggests conviction. Here is today's actionable takeaway. Weakness in equity markets, should it develop, should be treated as an opportunity rather than a threat, especially in the metals and select mid-cap spaces where growth narratives remain intact. The strong technical setup combined with benign inflation readings and stable rate expectations provide a constructive backdrop for tactical bullish positioning. However, confirm your entry near support zones rather than chasing rallies, particularly given the elevated volatility around year-end. Stay disciplined, manage risk, and remember that this is holiday season trading with lighter volumes, so treat sharp moves with a grain of salt. If you have questions or observations on today's market action or specific stocks you'd like us to cover, do send them in. Join us again tomorrow morning for our market wrap, and we will continue tracking all the developing stories. Stay tuned for tomorrow morning's wrap and send in your questions. Thank you for listening to What Moved the Market.